Welcome to the AACFB's 2025 Meet the One Funder webinar series. My name is Monica Harper. I'm the Executive Director of the AACFB, and I will be your host. Our presenter today is Brian Troubles from Equipment Leasing Group of America. ELGA is both a funding source member and a gold sponsor of the AACFB, and I'd like to thank them for their support of the association. Thank you. Before I turn it over to Brian, I'd like to go over a few items to make this webinar more enjoyable and informative for everyone. During the presentation, you should see a Q&A box that allows you to ask questions. If you have any questions during the presentation, please submit them in the box and they should be answered by the end of the webinar. The entire webinar should take no more than 30 to 45 minutes. And for those of you who would like to review it at a later date, it will be posted on the 2025 Meet the Funder page of the website, and it will be emailed out to the AACFB membership. At this time, I will turn it over to Brian. It is all yours.
Hi, Monica. Thanks very much for the introduction. I very much appreciate it. We're excited here at ELGA to be presenting for the funding for the association here to meet the Funder webinar. And my name is Brian Troubles. I am CEO of ELGA, Equipment Leasing Group of America. We've been around for about 16 years and been members of AACFB for quite some time. So again, very happy to be on here. I've got a nice little presentation put together here. We'll go over a little bit about what we do, and then we'll dive into some credit criteria and cover some various topics, and we'll answer some questions after that. Thanks very much. So ELGA, we like to say that we're beyond conventional lending. We're very innovative with our financing and go ahead and try to figure out really what is the best way to structure a transaction. So our transactions are something where we are very innovative financing with a relentless commitment. We've got a new thinking to the same old CapEx where we can understand where conventional lending can limit access to flexible capital. We understand how to go ahead and structure that transaction the right way and offer highly competitive expert equipment financing that goes beyond the constraints of conventional lenders. We have ongoing CapEx turnaround and recovery CapEx financing, as well as we do large ticket customer finance programs for our vendors and can go ahead and fund your vendors as well. We've been working with the broker community for quite some time and look forward to doing that much more with them. For our brokers, we go ahead and start at $250,000. We are not your small ticket shop that goes ahead and scores within minutes. We go ahead and look for a full doc credit package that we go ahead and receive from the customer, underwrite, and I'll go through a little bit of our process later. But we're very good at understanding those challenging credits, whether they might be a startup struggling a little bit, or they've got a great new contract, but the previous financial statements don't necessarily cover exactly the debt service that they need to go ahead and get at a bank or at a different funding source. So we work from $250,000 on up to $50 million. We do participate once we go to over around that $5 million mark or so, but we've worked on very large transactions to know how to structure them the right way. Customers spending this kind of money deserve more of a customized solution. We work quickly and personally with the client to bring that right solution to them and making sure that we're getting the transactions completed. We've got an ability to serve a much wider variety of backgrounds, and we've worked with Fortune 50 investment grade companies all the way down to your mom and pop startup buying their first piece of equipment. We also are a generalist and have a wide variety of asset types. Whether it's new, we also work with used equipment. I know that we just did a 31-year-old crane about a month or so back. So we understand that, but we work with all different types of assets, anything from construction to manufacturing, industrial to medical, did a whole ICU unit for a hospital to corporate aircraft, tugboats. We've really seen the full gambit and kind of keep that pretty wide open. Also, we like to go ahead and have you spend less time working the deals and finding more transactions, which allows you guys to go ahead and maximize your revenue because we'll go ahead and work direct with that customer. You can be as involved as you would like or as least involved and just want to throw it on over the fence, we can run with it as well. We are Equipment Leasing Group of America, so we're across the entire U.S. We are strictly in the United States. We don't go up north to Canada or down to Mexico, but we will go ahead and work. But we are kind of broken out across the country, 25% in the east, 28% in the west, and we're located. Our headquarters is in Chicago, but we have people in Idaho and Utah and Florida, and so we're all across the country, but we've got 47% of our business is located in the central states there. Equipment type, like I said, we're kind of broad, but we're a little bit heavier in construction, 30%. We've got transportation. We are no longer doing Class 8 trucks at this moment in time, but we still have a decent amount in our portfolio. Plus, we've got some dump trucks and other things, utility trucks in there as well. Commercial services is 10%, and everything else, we've got medical, aircraft, automobile, engineering, manufacturing, agriculture, and other. So there is a wide variety of assets that we go ahead and utilize in our portfolio, and so we can take a good peek at a lot of different things. This is our 10-step process. We'll go ahead and talk to you about a new lead. We fill out kind of a one-pager of information. We call it our new transaction summary sheet, your get to know your customer sheet. And then we will go ahead, fill that out, obtain an initial credit package, and then it moves along to a credit pre-screen where our credit department will go ahead and say, okay, we've got everything that we're looking at here, and just do a preliminary run at it. And with that, we will go ahead and give either a red or green light. That can take anywhere from 24 to 72 hours, depending on the complexity of the transaction and what we're looking at. And then we go ahead and like to issue our proposal. And our proposal will have all the terms and conditions in there. We do have a DocuSign for our proposal and send it on out, review that with you as well as the customer. And at that point in time, we know exactly how much we're going to be paying you regarding points. Then we'll have the customer go ahead and sign that. We do collect a commitment fee because of some of the transactions that we're working on. They do take a lot of time and effort. And that's something that we do get a commitment fee up front. The difference between a check and the difference between a commitment and a transaction is a check. And so we go ahead and sign them on up. At that point in time, that's when we do the full underwrite. That's when we're going ahead and doing suits, liens, and judgment searches. If we need to get an appraisal because it's a sale leaseback or we're using additional collateral, that's when we're getting those appraisals completed. But we're diving in deeper, making sure that we've got the ratios correct. If there's any other outstanding items that, if there's a company and their net worth is $10 million and $9 million of is accounts receivable, we're going to go ahead and get an AR report. So any of those standard customer credit related items. Once we do the full underwrite, we move on to our approval. At that point, usually 90% plus of our proposals are approved as is. That last 10% is when a bankruptcy popped up that wasn't found earlier, or there was a tax lien, or something came out that we weren't expecting and wasn't disclosed to us, and we went ahead and found during that due diligence process that we would go ahead and shorten up the term, or the value of the equipment maybe didn't appraise out. Something along those lines is that 10% variance there. And then we go ahead and move into documentation. We have a little questionnaire that they fill out. And then we've moved on to funding, and then post-funding, just sending them regular invoices, following up on the insurance and everything along those lines. So at this point in time, I'd like to move over to our profile. This is kind of the various different things that really make ELGA what ELGA is, that tell you when you should send us a transaction. So we are a direct lender. We have our own lines of credit and our own money that we go ahead and advance against. And we are a generalist where we are equipment and credit agnostic, where we're working with A credits, B credits, C credits, and like I said, all the different types of assets. Our minimum transaction size for our brokers is $250,000, unless it's under a vendor program. And then the maximum is 50 million. And I had mentioned previously around that 5 million mark, we're probably going to go ahead and get some sort of participation. We just don't want to be too concentrated in any one customer there. We are both a credit and collateral based lender. What I always say is I look at the credit first. If the credit's there, we ran the entire software program for McAfee. There was nothing there, but those were all Fortune 500 companies that we were working with, audited financials, It was essential equipment. And as we go down that credit spectrum, we're going to want to make sure that we are secured with collateral. And that's where we're going to look for harder assets. We're going to look for a crane. We're going to look for some yellow iron. We're going to look for that CNC machine, something that's going to hold its value and something that if the transaction were to go sideways on us, that we could get out of it that way. And so we've done it. I did a crane for a 480 credit score once, but it was something that there was a story behind it. The guy had been divorced. The wife had racked up all the credit cards and everything, so he kind of just got stuck there. But he had been operating a crane. He saved 30%. We had 30% down on the transaction, and we put 2 GPSs on the thing, and he hasn't missed a payment. And it's something that we understand that we'll listen to that story and go ahead and be able to get out of that because the credit wasn't there, but the collateral definitely was. And so we were able to structure that transaction the right way. We will do app only, but it's going to be only for vendor programs or for portfolios. When we're looking at a transaction, we do buy portfolios. So that'll be up to $250,000 for vendor programs. Depending on the collateral, we might lower that down to 150 or something. But that's got to be strictly for vendor programs. Otherwise, our minimum transaction for a one-off transaction with our brokers is $250,000. We do use our documents. We don't do any sort of discounting or your docs with our name, anything along those lines. The only time that we will go ahead and buy paper is with a portfolio sale. We do require 3 years of financials, audited, reviewed, are all good, obviously. And then internal with tax returns, we will fund off of those. We don't really have a minimum FICO score. Like I said, I did a 480 FICO. And then the PayNet, we don't really have a minimum there. Again, we look at both the credit and the collateral and can go ahead and structure transactions accordingly. The additional items here, like I mentioned, we work with A credits, B credits, C credits, structured. Kind of the way that we look at them for ratios, debt service is obviously a big number in the finance industry. For A credits, we're looking at a 1.2, B 1.1, and anything less than a 1.1, we are looking at that as a C or a structured type transaction, and we'll adjust accordingly. We don't have any sort of minimum time in business. We will work with startups. With those, we're going to require some money down. We're going to require some structuring and make sure that that they're buying some good hard collateral, unless you've got a really strong personal guarantee. And that's something that we will go ahead and get as personal financial statement on any guarantors and the information behind that. Our rates, our buy rates are anywhere from 8.5 on up to 20% plus when we start getting into that structure world. We pay out points. They're all built into the transaction, anywhere from 0.5 point when we're getting up to that 5 million, type transactions, up to 5 points. When we're on the smaller side. And we've got a rate sheet that anybody that's interested in signing up with us, we can have you send an email and get you signed up for our rate sheet that we send out on a regular basis. In general, kind of the same industry standard is we'll cover 20% of soft costs, but that's always dependent on the credit. When we get into that C credit and D credit, it's really something that we're going to go ahead and want to cover those soft costs with some sort of down payment or additional collateral, something to go ahead and securitize ourselves. We work with all 50 states. I had showed you that we're across the country there. And our terms are anywhere from 24 to 84 plus months. When we get past that 84-month term, it's really going to have to be a crane. It's going to have to be an aircraft. It's going to have to be something along those lines. Returning customers, we do have a broker protection program. So all of our brokers, all of their transactions are entered into our CRM and they are marked. We have never gone around a customer and never will. This is a very small community and we would always want to honor that. So if a customer calls me back up 6 months, 5 years, 10 years, whatever it might be down the road, I'm going to go ahead and call you up and say, hey, Bob Smith called me up again. He'd like to go ahead and buy, a bulldozer. I've got 3 points built in there for you. Would you like us to go ahead and issue terms, or it's your customer? If you want to go somewhere else, that's understandable, but we'd always like to win the business, obviously. We will do progress payments. The vendor must qualify. They can't be a brand new vendor. And we're going to go ahead and keep an eye on that. Typically, we like to see that under 90 days. But we will work depending on the strength of the vendor with longer. Something else that we do that many others won't is private party sales. When we get into a private party sale, though, I'm going to get an appraisal on that piece of equipment. We're going to make sure that we've got eyes on it. We're going to get it all checked out. So that's something that we will go ahead and do. But we do a lot more due diligence on those because private party sales have a lot more red tape on that. We have to make sure that the lien is clear, the title's clear. We send a certified check that they're meeting on site to make sure that we are actually getting a good sale there. We do also buy portfolios. So we're looking at A, B, C type portfolios. And again, we'll run app only up to 250,000. Anything above that for transactions, we are looking for that financial package. Lease structure types, we do all of them. We do EFAs, we do buck outs, we do FMVs, we do track leases, split tracks. We do a lot of different various structures, aircraft financing agreements, so on and so forth. So we basically do them all, and so we can go ahead and structure the right transaction for all of our customers. I will say that. The equipment types, I told you that we're a generalist, but we do software only. We've got aircraft, ag, construction, commercial, crane, energy, medical, municipal, technology, industrial, manufacturing, marine, but in general, we're a generalist. There's really not a whole lot that we don't do. The only three things right now that I would say that we're specifically not doing in the industries is one, transportation. I covered Class 8. I think everybody understands that. And that industry is really hurting right now. And that's something that we decided a couple of years back we weren't going to do anything. And so we'll see if that lifts in the future. But as of right now, we're not doing that. Cannabis, my joke on that one is that we pass on grass. We do have bank lines, and obviously they don't let us do anything there. And so we go ahead and pass on those. And then oil and gas, anything specific to the oil and gas industry. I will go ahead and do a water truck. I'll do a crane, but I'm not going to go ahead and do the actual oil rig or any of the hoses or anything along those lines. But if it's something that I can go ahead and utilize in a separate other industry, we'll go ahead and take a peek at it, and happy to go ahead and see what we can do there. And that kind of covers majority of what we've got. And I just appreciate the time that we had here today, and appreciate the AACFB and everything that they do for all of our brokers out there, and appreciate the time that they've provided us here, and happy to go ahead and answer any questions that we might have.
Right. Just as a reminder, if you have a question, please type that now into the Q&A box and we'll get that answer for you. We do have a question. They want to know if you will finance aircraft to private individuals.
Yes, we will, but it's got to be for commercial use. Everything that we do has to be commercial. So if they're financing it, it's got to be tied to the business. So it's not necessarily for individuals, but for a corporation. If there's a sole proprietorship out there, I've got to have some sort of commercial use for it. If it happens to be that they are entertaining for their customers and that they're taking them back and forth to Vegas, that's called commercial use. So something along those lines, as long as it stays commercial, that's the requirement. We are only B2B. We're not doing any sort of direct to consumer.
Gotcha.
Obviously, a lot of different laws, different contracts, everything.
Will you do a steel frame rolling machine? This person has 3 deals right now.
Why not 4? But either way, a steel frame rolling machine, I believe that should be fine for us. I don't see that as an issue. I'm not too familiar with that type of equipment, but that's something that we could definitely go ahead and utilize and take a peek at. Right. Again, I look at credit first, and if the credit's not there, we're going to start looking at the collateral. We'll dive in to a steel frame rolling machine and see what type of collateral that might be. Okay. My credit guys might know better than I do.
Are you onboarding new brokers, and what are your requirements for a new broker?
So Jax, yes, we are onboarding new brokers. We have a application and an agreement, looking for a couple references, and obviously being a member of AACFB always helps. And we'll go ahead and you can reach out to info@elgallc.com, and we can get you all signed up and have one of our broker reps reach out to you.
Right. Does the commitment fee you collect get applied to the lease?
Yes.
Right.
So less any expenses. If there's an appraisal or legal or anything along those lines, that would go ahead and come on out, but that would be all be laid out in the invoice that we're utilizing there. But yes, the full commitment fee gets applied to the transaction, whether it's the first payment or doc fees or whatever it might be. Yes, it's not an outside fee. We will go ahead every now and then charge an origination fee, but that's in the structure that'll be in the proposal and very clear.
LMC Alternative Business Capital wants to know if they're already an established broker with you guys.
I would have to go ahead and check, but we'll go ahead and check and see if LMC Alternative Business Capital is in there.
Okay.
We can
Jack wants
check
to
on
know
that
if
for you.
you sell portfolios.
Do we sell portfolios? If we do, we retain the servicing. So we have some of our bank lines that will go ahead and buy that out for us, but we go ahead and retain the servicing on that. I can't guarantee that 100% of the time, but yes, just like any other lender does, we do go ahead and sell some portfolios from time to time. Not a whole lot, but we do reserve that right to go ahead and sell. We do make sure that part of that I talked about as our broker protection program. We make sure that we are protected on that as well, so you're protected.
Okay. How much is the commitment fee?
It varies. It's something that we've got a bunch of different guidelines, and it depends on what's in the transaction. If I'm getting an appraisal, I go contact my appraiser and say, how much is this? I go ahead and figure out how difficult is this transaction gonna be? How much time and effort are we gonna put into this? And when we get into those structured type transactions, they might keep shopping the transaction. And the commitment fee, we refund it less any expenses. But if we go ahead and approve the transaction perfectly as is, like I was telling you, 90% of our proposals are approved as is. That's something that we go ahead and that's a commitment fee that is earned at that point in time if they decide to back out of the transaction. Because we've gone ahead, kind of what we say is you can bring a horse to water, but you can't make him drink. We put our best foot forward. We issued a proposal, and if we approve that transaction and they decide to back out of it, it is called a commitment fee. So that is something, but it ranges anywhere from 1% to one payment to, it could be $50,000. It all depends on what the transaction might be, but it's something that we work with our customers and want to make sure that we're getting the transaction across the line and at least cover our expenses when we're signing up a transaction. Because like we said, we're doing a few $1 million deals. And we've got a lot of moving parts. We do transactions, we've done mergers and acquisitions where there is so much work going on that we got to make sure we're covering the legal fees tied to that, to make sure that everybody has making sure that we have our liens perfected.
Right. Do you offer an online portal for submissions?
We just redid our website and our logo and everything. That's something that's going to be phase 2 for us. So right now we do have some encrypted emails that we can go ahead and send you and have the customers submit that way. We do have an online application, but otherwise the rest of the package would need to be go ahead and emailed on over. But it is something, like I said, that we are actively working on.
Right. Would you elaborate more on new business requirements?
The new business, we're looking at, they've done their homework. Have they gone ahead and put together some sort of pro forma? Have they gone ahead and do they know the numbers? One of the key questions I'm going to ask is, what's the cost justification for this? How do you know that you can actually pay for this piece of equipment? And what's the money down? Typically on a startup, I'm going to look for at least 10, if not 20% down. And I'm going to go ahead and make sure that the collateral is absolutely essential equipment. I'm going to probably have a shorter time frame, unless it's a stronger guarantor. If I've got a strong personal guarantor and they've done this and it's just another SPE that they're building out, I might have a cross-corporate guarantee on that if they own other businesses. So there's a lot of different things that we can do. I mean, there was one transaction that the guy didn't have cash, but his wife had a $20,000 diamond necklace. We took that and threw that in our safety deposit box for a year. And then we went ahead and released it. But we knew that guy was going to go ahead and make that payment because he wasn't going to lose that $20,000 diamond necklace for his wife. We figured he was going to definitely make the payment to us. But we want to make sure that we are structuring the transaction that works for them, but at the same time, make sure that we're fully collateralized.
Right. What is a typical time from submission to approval?
Again, this is kind of variable, but from the time that is submission to approval can be, let's assume everybody's playing nicely in the sandbox, about a week or so. And then thereafter, that's up to probably about $1 million. Anything above and beyond that, And that assumes, again, we've got a full, clean credit package that is right there. There's not too many questions. Nice, easy transaction to move along for an A or a B. When we get into those C and structured, it takes a couple weeks, up to a month, even if we've got to order appraisals. We don't, those are third party, so we're at their time frame. And so we go ahead and we'll order those and set those up, schedule those, and that really depends on them. But we try to keep it moving as fast as possible, and making sure that we get the turnaround from the customer. That's the key, is making sure that we've got the questions answered that we need to go ahead and go to credit committee. We have credit committee every Tuesday and Thursday. So we've got a couple different limits as well. Up to 500,000. It's a couple people that sign off. Then we go to $1 million. Then once we start getting above $1 million, we start taking things to the board. So it just kind of delays things a little bit further. But I'd say on average, week to a couple weeks.
Do you finance aircraft in Canada? Do you do anything in Canada?
It's got to be a U.S. entity located in the United States. Now, with the plane, they fly internationally. So it's not necessarily something that we have to worry about there, but we do need to have a U.S. entity. We are, like I said earlier, my joke is we are Equipment Leasing Group of America, so it's got to be in the United States.
Well, technically, Canada's in North America.
I know I've gotten that one before, and that's why I said United States. So either way. And that's why we got the red, white, and blue logos going.
Sure. So if the company is in Canada or in the United States, then you could probably do it.
Yes, it's got to be a U.S. entity.
Um, Please define a strong guarantor.
Probably all of their debt to income probably needs to be 40% after we put all our debt in. So if they make $100,000 a year, we can't do more than $40,000 for them at best. And it's something that I prefer. Our average transaction is about $1 million. And so with something along those lines, they really need to be making a lot of money. And they've got to have a couple $1 million net worth. They've got to have some liquidity to that. It can't just all be tied up. They've got to have some actual, cash. For example, we did a dredge, $1.6 million dredge. Then the guy had a $200 million net worth, $20 million was cash. It's kind of a no-brainer type deal, but the company did not cash flow whatsoever. So no bank was going to go ahead and do that. And we went ahead and found a nice structure for them to go ahead and get that done. Now, I'm not expecting every $200 million, every guarantor to be $200 million net worth. But at the same time, we want to make sure that they've got liquidity, that we can go ahead and they've got some money to put down. Again, I'm probably going to get 20% on a startup. And then I'm going to go ahead and look for them to be able to stand behind that, as well as if I can get out of it with the collateral, I don't need as strong a guarantor. And that's where, and one of the biggest things, I love cranes. You'll see cranes all throughout this presentation. It's about, it's a good size of our portfolio. The boom truck type cranes, give me that $300,000 to $750,000 crane. I love those. So you give me any of those with 20% down plus taxes, I'll do the deal.
Right. Are you noticing any trends in funding by location or zip code? Are there particular parts of the country experiencing more submissions or approvals?
I would say Florida, Tennessee, and Texas. Those are just ones where everybody's migrated to. So there's a lot of construction, a lot of things going on there. We really like those areas. I like Cincinnati a little bit too, as well as Ohio. I think that they've done well. But there's a lot of states that have a lot of people leaving them. And a lot of people seem to be going towards Florida, Tennessee, and Texas.
Gotcha. All right.
I would say we are registered in California. I will tell you, there's a lot of extra red tape there. There's a lot more disclosures going on. And so it's something that in California, we prefer in California, we don't have a hard limit on that. We prefer in California that we're over the $500,000 amount. Just there's a lot of extra things going on
Make
there.
it worth your while.
Obviously. Yeah, exactly.
Are you a direct lender?
Yes, we are. We have our own lines of credit. We have our own money that we go ahead and approve the transactions. We started, just so you know, I don't know that I went into this, but I started off as a broker myself back in 2009. A very interesting time to start up a company. But we started off as a broker and we built our balance sheet up. So I know what it's like to sit in your shoes. And so I don't like double brokering the transaction. If we are ever going to go ahead and syndicate it, I will come and tell you first. Because if we say, you know what, this really isn't a fit for us, it doesn't meet this parameter, or whatever it might be, I will always tell you, we have a place that we can go take it, but we're not going to be the lender on it. And I will always be upfront about that because I've sat in your shoes where it's like, oh, we're getting this done. All of a sudden, it's two people on over and they're telling you credit committees tomorrow, and then it doesn't happen. And there's 3 days later. That's not the way that it works. We are an independent lessor too. So we're not a bank. So I don't have all of that red tape that I have to go through as well. So if I really need to move fast and we're at the end of the month, at the end of a quarter, at the end of the year in particular, we go ahead and we'll have a credit committee tomorrow, today, whatever it might be, to go ahead and move it along. That's something that if we've got the information, we can move fast. But at the same time, we got to make sure that we are checking our boxes, because a lot of the transactions that we're working with, when you get into that innovative financing that I was talking about, that requires us to dig deep. And that takes time, unfortunately, to dig deep.
Cranes and other construction equipment. If you ask 10 lenders, all 10 of them will say they love yellow iron, heavy construction equipment, etc. What makes you different than all the other lenders that love this type of equipment? So hard to get your foot in the door with these vendors.
Tell them you did a 480 credit score. That's what I'd like to go ahead and say. Say that we were creative, that we'll go ahead and get that diamond necklace. We'll go ahead and do a cross-corporate guarantee. Yes, everybody does love those. And if you've got an A credit, let Wells Fargo do it. That's not us, I will tell you. But what we're going to go ahead and do is the tougher, get the turn downs from them. And that's how you get your foot in the door. Say, okay, give me the bottom 5 that are sitting in the bottom of your desk that you couldn't get done. And if we can go ahead and figure out some sort of structure together to get them done, that gets your foot in the door and gets it open. Then you start bringing them donuts and coffee on a weekly basis, and then they start sending you more and more transactions. But we've built out that C and D type relationship, that they've got their A's and B's. And again, you can go to Wells Fargo, they're cheaper than me. I can do your A's, I can do your B's, but I borrow money from the bank. I'm not the bank. So I will go ahead and have those and get those done. And they're going to go ahead and do those app-only transactions and move those along a lot faster. Again, I'm a full credit shop. I need a full credit package. And so the way that, yes, all of us love that type of collateral because it's a hard asset. It holds its value. I can get out of the transaction. So what I can do is go ahead and get those extra transactions that you've got someone, but there's something going on with the credit and they can't get that done. When they can't get that done, that's where the innovative financing with a relentless commitment of ELGA comes through.
Do you require PGs to be U.S. citizens?
No. Well, if I'm looking at a PG that is not a U.S. citizen, I have to look at it like it's a corp-only transaction or a collateral-based transaction. So if they're not a U.S. citizen and they don't qualify for corp only, I'm going to get a large down payment. I'm going to go ahead and make sure that I'm fully collateralized on that type of transaction. But no, we do not require them to be U.S. citizens in order to complete a transaction.
Well, I'm looking to see if we had any other questions coming in.
Great questions. I appreciate it.
Yeah, this is some great interaction going on. So I don't want to cut anybody off, but I think we've come to the last question. So with that, I will go ahead and wrap things up. I want to say a big thank you to all of our participants, and especially our valued funding source member and gold sponsor, ELGA. Thanks for a great job, Brian. And we invite everyone to meet with ELGA in person at the Commercial Financing Expo coming up this September in Austin, Texas. Thanks again for joining us and have a great day.
Thanks, everybody. Have a wonderful day. Bye-bye.